Today we have released the 5th edition of the Journey to Treasury, the so-called GTT. It is a Treasury roadmap produced annually by 4 partners: BNP Paribas, PwC, SAP, and the European Association of Corporate Treasurers, EACT. GTT is a thought leadership initiative. The aim is to help finance professionals resolve their intricate puzzles. The approach consists of selecting hot topics, choosing case studies, and sharing views with professionals. Several crucial questions emerge. For all selection of the financial community, what is worth paying attention to? Which technologies are going to impact my decisions? What trends and initiatives will be truly transformative? Of the many initiatives on the way, which will be key to my journey? The outcome is unique in the world of corporate treasury. It is a collaborative, multifaceted view dedicated to professionals in a volatile world. Businesses change. The regulatory and technological context of doing business change. How initiative happens and how IT systems are designed is changing too. Each of the 4 Journey to Treasury contributors offers their own expertise gained from their own journey in this bumpy yet encouraging landscape. This year, for obvious reasons, on top of the classic GTT edition, we have decided to launch a few COVID-19 special editions. As individuals and companies, we find ourselves in exceptional circumstances that few, if any, could have foreseen. BCP programs have been triggered worldwide, but many of these plans did not anticipate the global reach of the health crisis. This Journey to Treasury bite-sized series provides support for treasurers as they navigate this challenging period. Jan Dirk, could you please give us some highlights on these special topics addressed?
With pleasure, François. As one of the founding members of the Journey to Treasury partnership, I'm very happy and proud that during the initial months of the pandemic we decided on the creation and publication of a special edition, as we felt we had to support our readers, corporate treasurers, immediately and not only after several months. This resulted in the GTT Special Edition, available online on our website and discussing important subjects like protecting employees, protecting the business, defense against fraud and cyber attack, managing liquidity at a time of crisis, cash flow forecasting in uncertain times, FX hedging in volatile markets, and managing the working capital gap. For me, the most important messages from this series are: develop emergency policies to anticipate and adapt quickly to major changes in the business environment. Think the unthinkable when reviewing your business continuity plan. Fraud and cyber attack are on the rise. If something doesn't look or feel quite right, don't do it. Even when treasurers have been able to forecast quite effectively in the past, previous assumptions are no longer valid. Rebuild your cash forecast model now. Use the opportunity of increased senior management and board scrutiny to educate and inform on what Treasury does, the value it offers, and equally what it cannot do, such as managing economic risk and the associated FX risk, which remains a management responsibility. Put Treasury in the spotlight and get your projects approved. While co-creation between banks, technology companies and clients has been a growing trend in recent years, the pandemic has accelerated this trend. Find yourself a trusted partnership. Thank you very much for this opportunity to address you. And back to you, François.
Thanks, Jan Dirk, for this summary. Before thinking ahead, as it is a 5th edition, we wanted to look back. It is interesting to review the emerging themes identified in former edition and case studies we covered. GTT reflects the changing environment in which we operate. We have extended the report from a European perspective to a global outlook on priorities the treasurers face. Many of the themes featured in previous reports have remained accurate for treasurers. For example, we have covered real-time payment, cyber risk and fraud, and digital technologies. Typically, treasurers have refined domestic payment and collection over time and were more concerned about the unpredictable settlement, timing, and lack of traceability of cross-border flows. The speed of change has been remarkable. Companies in almost every industry are embarking on new business models. Real-time payment and collection are often at the heart of these new digital business models. As the use of digital technology across all aspects of our lives has increased and evolved, so too has the risk of fraud within or outside the organization. Treasurers rarely own responsibility for cyber risk, but they play a major role given the sensitivity of the data and the scale of financial transactions. We also recognize the potential of artificial intelligence and big data. The development and opportunities created by new digital technologies has been a consistent theme over the past years. Digitization had become internalized as a treasury concept, with treasurers seeking to understand what the digital treasury meant in practice. Now, let's give the floor to Steven to talk about the working capital and ways to enhance it.
Thank you, François. I'm glad that you asked this question, as working capital optimization has indeed been top of mind lately. Obviously, the COVID-19 pandemic has disturbed physical supply chains and consequently introduced a knock-on effect on financial supply chains. The opportunity of a crisis like COVID-19 lies in the fact that it is a trigger to revisit our habits, and it installs urgency to drive change. Maintaining access to appropriate levels of liquidity has been of utmost importance, as the pandemic has in many cases changed the liquidity dynamics dramatically. This has put the onus on working capital, as although there are other means to procure liquidity, optimizing working capital is often the most efficient and cost-effective approach to avoid or resolve liquidity shortfalls. However, working capital management is often not, or only partially, in the remit of corporate treasurers, as the EACT survey in the GTT report suggests. Consequently, CFO buy-in for an integrated approach on working capital must be gained, as otherwise Treasury will be solely managing the outcomes of decisions by other business functions. Treasurers can help building understanding, define objectives aligned across relevant business functions, and manage a range of working capital metrics. End-to-end visibility on the supply chain and hence the procure-to-pay and order-to-cash cycles enables to detect opportunities, and access to the relevant data, ideally drawn from the wider ecosystem, is paramount. Treasurers should also look at evolutions in the payments and collections landscape and further centralization to improve efficiency and predictability. The crisis has also shown that corporates need to look beyond their own boundaries in order to obtain a sustainable approach and strengthen relationships across supply chain. In addition to the liquidity side of working capital, corporates should of course look at their supply chain more broadly in order to strengthen resilience and consider rebalancing and or further diversifying their sourcing and distribution options.
Steven, thanks a lot for these useful comments. Now I would like to introduce Didier, who will explain why centralization remains a key strategy for multinational companies.
Thank you, François, for asking this question. If you look at the most advanced, most efficient treasury organizations, the majority of them have gone through a certain form of centralization of their treasury operations. And why is that? It's because it has been clearly demonstrated that centralization can bring significant benefits. And it can come from different angles. Of course, cost reductions is one that comes to mind first, but it can also be driven, for example, by fraud that has happened and the company wants to have a better control over the payment processes. There are multiple other examples which are provided in the Journey to Treasury report. Couple of additional points I would like to add to your question. First, it is uncommon that a treasury organization is centralized from the beginning. It is a journey that has to be planned with realistic objectives and over a certain period of time. You will rarely hear a treasurer say, "I've completed my whole centralization exercise." In that sense, a phased approach with clear benefits prioritization is key for success. Second, I do expect the interest for payment centralization with payment factories and payments on behalf of solutions to further increase in the future, and not only for large multinationals. The risks of cyber fraud and cyber attacks have become so prevalent during the COVID crisis that having control over payment and liquidity is key. Better control over payment outflows will also help improve working capital management, which again is top of the agenda these days. And thirdly, global centralization at all costs might not be the right answer. For the global companies, keeping contact with the local and regional specifics will be very important. Reason why a model with a global treasury center, supported by regional treasury centers, is still very popular. Finally, I would like to close by saying that, similar to the 2008 financial crisis, you can see that the role of treasury has become again more strategic and more recognized by senior management. Meaning that even if a lot of corporates are very cautious at engaging into additional costs these days, Treasury should be able to gain support for projects, for example around better payment controls. I would be curious to hear the results of next year's Journey to Treasury survey and see whether that has come into a reality.
Thanks for these insightful comments. And now I would like to ask Christian to address the hot topic of the Treasury on demand.
Thank you, Francois, for this interesting question. Let me start with the fact that we are proud to be part of the initiative for the 5th edition of the Journeys to Treasury report. Given the current circumstances, we can already see that in today's environment, we need to adjust established processes and looking for alternatives using technology. Prominent example is this virtual video recording. However, let's come back to your question. Looking back to the previous 5 years in which we are working on the GTT editions, we can clearly see that digitization in treasury organizations has been one of the top priorities, and even more important, for those organizations that have invested in that area, they are clearly advanced in today's environment. To give you some examples, we only need to look back what happened earlier this year of the spread of the pandemic situation and the impact for corporates which suddenly closed their facilities, buildings, and production plants. While indeed industries were hit differently by the crisis, treasury organizations were always on top of the agenda, and they have become one of the most important stakeholders in leadership meetings, providing up-to-date information on finance KPIs. At the same time, they need to make sure that treasury operations were still in process and supported. This includes major critical aspects such as cash collection, payment operations, adjusting liquidity forecasting, funding, and even adjusting hedging strategies. How can you support that without having the right infrastructure, system support, and organizational setup, which includes topics like remote workplaces and equipment for your staff? Furthermore, collaboration with internal and external stakeholders remains a key priority to exchange information with banks, suppliers, and even trading partners. And even more important, organizations need to make sure that they also invest in cybersecurity to avoid fraudulent processes and to stay compliant within the given policies and legal guidelines. What we can see today is that priorities have changed and that digitization and the need to provide almost real-time information is key for treasury organizations. Most of the clients have set up already projects in which they improve and adjust system support for major critical tasks and processes. This includes topics like KPI reporting, increasing automation and collaboration, and even seamless connectivity. More interesting insights to that topic are delivered with the new report, in particular in the Treasury on Demand section, in which we are also providing a case study from Nokia, which has nearly achieved a real-time treasury. I wish you all the best for the future and hope to see you soon in person. Thank you, and over to you, Francois.
Thanks, Christian. As every year, EACT runs a survey among 200 treasury professionals from across Europe. The main conclusions are the following. Cash flow forecasting is the highest priority for Treasury for 55% of respondents, continuing a long-term issue reflecting the importance of liquidity management during crisis. 62% use or plan to use data analytics. 35% use or plan to use application programming interfaces, APIs, to facilitate integration for the on-demand and real-time exchange of transaction or data. 37% reported that working capital management is a significant priority. Although treasury centralization has been a long-term trend, it remains a priority for 1/3 of treasurers. Fragmentation and lack of standardization across processes and control remain the biggest challenges to centralization. And eventually, most treasurers are motivated to support their company's ESG initiatives and play an active role. Finally, we wanted to thank everyone for the support and participation. This issue is an excellent reference document you must read. You will be able to download the last GTT edition in more detail on our website www.journeytotreasury.com.